Okay, continuing with the footprint series, here we have part 4, Delta and CVD. In this video, we'll be going over what Delta and CVD are and what to look for, going over the use cases, and finishing up with various examples. So without further ado, let's get into the definition side of things. What is Delta? Delta is the difference between market buys and market sells for a given candle. If we take a look at the example we have on the screen here, we can see that the total volume being transacted was 55 million, and the total delta is negative 10 million. We arrive at this conclusion by adding the total buys and total sells together, and we can see that there was negative 10 million more sells than buys. What is CVD? CVD is the cumulative volume delta, and it is the cumulative sum of delta over a given time period, most notably the daily. This will be recorded in two ways: in footprint statistics, which is pictured on the screen here, and in delta bars, which we'll be going over soon. So how do we use delta and CVD in footprint? We use it in two major ways. One is going to be delta spikes. This is the large upticks in delta where we're spiking into the extreme, late into the rotation ideally. This will be pictured in delta bars. Alternatively, we have CVD divergence. This is when price and CVD are going opposing ways. So if price is making a lower high and CVD is making a higher high, it is showing us that the ask is absorbing. Okay, so let's break down delta spikes. So first off, let's point off that we're looking at delta bars. It starts by seeing a large uptick in delta that is significantly more extreme than the other candles that you're seeing. From there, we're looking for the P and B body styles because that's going to be a very obvious sign of absorption. So when we're looking to buy, we are looking for a large uptick in negative selling and a B style body, which is showing us that the bid is absorbing the aggressive selling. Alternatively, you would, for when you're looking to sell, you are looking for a P-style body, which would show you that the ask is absorbing. Okay, CVD divergence. So CVD divergence is basically just a very simple way to identify absorption. So when price is making a lower high and CVD is making a higher high, that's showing us that the ask is absorbing. And when price is making a lower high, or a higher low, excuse me, and CVD is making a lower low, it's showing us that the bid is absorbing. We can easily gain access to these tools in a couple different areas: Exo, Sierra, and Coinwise. Okay, so here's our quick example of what the CVD div looks like. So over here we can see that price is making a lower high and CVD is making a higher high. That results in some downside once these longs need to unwind. We'll have some better examples here in a moment. Okay, so CVD and delta use cases. So quickly, they're both definitely best used for reversion. There is some momentum style, but we're not going to touch on that today. We're going to focus on reversion. So for the delta spikes, we're looking for those larger, spikes in the delta bars. Normally, we want to see them as a result from a positional puke. Those are going to be some of your best reversion plays. And we're also going to be using regular CVD divs. So we need to make that point before we move on to the examples that I'm never using hidden or weak divs or anything. It's only just your regular divs. And that's showing you that the liquidity providers are stepping in and absorbing those aggressive flows. And once those aggressive flows start to be unwound, the price will really quickly start moving in favor of the div. So that's why these are so effective. So let's tackle some examples real quick. So here's a quick example of the passive bid absorbing. The two things that we're looking for: one are the upticks in the delta, and two, the B style bodies. So B's are representative of the bid absorbing. Next, we're going to have the opposing. So these are the P style bodies. So this is showing us where the ask is absorbing. We have the upticks in delta on delta bars and the P style bodies showing us ask absorption, which should lead to downside rotations. Okay, here's a CVD div. So we can clearly see that price is making a lower high and CVD is making a higher high. Once these longs and aggressive buyers have to unwind, the selling picks up and we get the unwind. Another div, this is a bid example. So we have price making a lower high, or a higher low, excuse me, and CVD making a lower low. It's showing us that the passive bid is absorbing here. Once the unwind begins, you see the momentum take off and the div plays out. That's going to do it for this one. Thanks, guys.